We're following a developing story on Chinese property giant Evergrande. A major debt deadline has come and gone. Let's get to CNBC senior correspondent in Beijing, Eunice Yoon, with the latest. Eunice.
Thanks, Melissa. Well, as you mentioned, that deadline for the dollar bond interest payment for Evergrande has now passed, and bondholders are now eyeing a 30-day grace period where they hope to have more information because the company needs to settle the payment of interest during that period or face a possible default. Now, the reason why people are somewhat hopeful that perhaps the company would prioritize this is because communicating with bondholders to avoid a near-term default was one of the priorities that the financial regulators had given to the company. And late on Wednesday night, the company's founder had followed through on two other recommendations by financial regulators, and that is one, to make sure that you guarantee the homes, and also to really give some confidence to wealth investors. So the founder had cobbled together and convened a meeting of 4,000 managers where he said just that he wanted the company to go all in, he said, to make sure that the company guaranteed homes, and then secondly, to prioritize wealth investors. The Wall Street Journal had also issued a report which really gave supported the general impression here that the company wanted, or the government really didn't want to step in with its own direct support, but wanted the company to be able to work out some of its own issues in order to avoid a disorderly potential ramification on the economy. In fact, the Journal quoted sources as saying that the central government had told local officials to prepare for a possible storm, and by that they meant that the local officials needed to talk to some local state as well as private developers to try to look at ways to potentially take over real estate assets, and also to prepare for possible unrest. And so the government had also said that the local authorities should only step in if they really felt that the government, that Evergrande wasn't able to sort out their issues themselves. And we've started to get some other indications that Evergrande could have some problems. The EV unit apparently has stopped paying some staff. And also the company has lost a key shareholder, a Chinese estate. One of the other big property developers here said that they were actually going to sell out about $32 million in shares, and that they hope to sell the rest of their stake. Melissa?
All right, Eunice, thank you. Eunice Yoon in Beijing for us with the latest. Let's bring in Joyce Chang now, the chair of global research at JPM. Joyce, great to have you with us.
Great to be with you.
Are you surprised at all the extent to which the situation has unfolded without the Chinese government formally stepping in?
No, I think this is going to be a complex, drawn-out process. I do think it will end up being state-guided, and our baseline scenario is for a debt restructuring, which is reflected in the marketplace right now. But I do think that you will have the government taking a role in this, in part because if you take a look at the property sector in China as a percentage of GDP, it's about 30% of GDP. So we do see implications to the overall macro outlook for China, where we had already seen growth slowing. But I think this is going to be a long process. And, there's many different factors that they will need to focus on, the workers, the wealth management products, what role the banks will take, as well as the creditors. So I don't think you're going to see everything unfold overnight. This is going to be one to watch, for quite some time, just given the size, of the issuance that they have done in the marketplace.
You hit on the aspect that I am particularly interested in, Joyce, and that is the importance of the real estate sector to the Chinese economy. Do you think, given the reaction we've seen in the markets, particularly the bounce back in assets in today's session, do you think that really fully reflects and digests the possibility that there could be a hit to the Chinese economy, even if it's through confidence being shaken of the consumer or the retail investor?
Well, we already had third quarter growth on a quarterly basis in China down to practically zero. And this was in part because of a drop in consumption, also some of the bottleneck constraints, and also the common prosperity financial tightening that had already been underway. So you already had a slowdown in growth going on in China, in part because of the Delta variant. So this is, more downward revisions that could be forthcoming. Given that the property market is 30% of GDP. But the one thing I do want to stress is we do not see this as a systemic problem to the banking system and to the overall property market. If you look at property developers, they are only about 7% of total loans. And if you take a look at the size of the total debt of Evergrande at 1.2 trillion CNY, that's around 41 basis points in total credit. And the loan loss provisions by the banks in the first half of the year was 340 basis points. So talk of a systemic problem, I don't see. Talk of more of a macro impact given the size of the property market, I do see, and a rising default rate also for Chinese high yield bonds.
Hey, Joyce, it's Tim. Not systemic, but certainly in terms of sovereign risk, macro concerns, and really just investors' confidence. Obviously, credit investors have a different place on some level in China than equity investors. So, and I wouldn't necessarily ask you to comment on each asset class, but clearly we've been going from sector to sector in China in terms of the heavy hand from top down. How are you guiding investors in terms of how to price in that risk?
Well, this is something, it's not systemic, but it's going to be more industry-wide. So we've seen a 5% default rate in Chinese high-yield bonds, and that default rate is going to go up. I mean, if you model some worst-case scenarios, you can get, very easily get into double-digit levels for what the defaults will be. It's had more of an impact on the equity market than on the bond market, but Evergrande is the largest non-investment grade issuer in the offshore corporate bond market. So this is going to have some reverberations. It's actually been less of an impact on the credit markets than one might have thought, given the size of the issuer. So we kind of have to look at what's surprising and what isn't surprising. China had been allowing corporate defaults. The issue is the size of this one, and it's going to take some time to work out. But we had been taking down the growth forecast even before this, but we still have China's growth at above 8%. For the full year. But property is 30% of GDP. And there will be an impact that will be felt on the macro side. I don't think this kind of contagion really has global ramifications, and those are the kinds of questions we've been getting. And I don't think it's systemic to the banking system in China either.
It's not systemic, no global ramifications, Joyce. But do you think that investors here should maybe entertain the idea that S&P 500 earnings could be impacted by a deeper slowdown in China than had been forecasted?
Well, I think that is a possibility, but we were very comfortable that we actually took up the S&P 500 target to 4,700 and also took up earnings based on the bottoms-up work we've been doing on the COVID reopening. And because we do see that COVID is infection rates are going down in 90% of the states, and I think that is actually a bigger factor to look at than what is going on in China. But we're seeing an impact in the commodity markets, on the China slowdown, which I think has less to do with Evergrande than some of China's policies. And I think the real question for investors right now is that we're looking at the economic risk, but we also have to look at the policy risk. We have to look at the policy risk from common prosperity, which is the longer-term agenda for China, how that's going to affect sectors. And it's not just the new economy. A lot of this, I think, will hit consumer protection, social welfare on sectors that are very important structurally to the middle class as far as the cost structure. It's focused on disposable income. So you could see that still having ramifications, apart from Evergrande. So I don't think this is over. This is a longer-term issue to watch.
Joyce, great to have you with us. Thanks so much. Joyce Chang, JP Morgan. Pete Najarian, China, is it a no-touch in your view for all the reasons that Joyce had elaborated on? Long list.
It is a long list, but I happen to agree with most of what she was laying out there for us. And one of those parts that she laid out was COVID getting better here, the improvements we're seeing in some of the numbers across the United States. So that part makes me feel a little bit better. I think it's a no-touch, Mel. I've said that for a while now, and a lot of that has to do with not what's been going on of late, but if you look back and you see what's been going on with the government involvement and everything else, it just makes me very nervous for those equities themselves, the stocks. So I've literally just stopped all Chinese stocks that I'm trading. I'll trade the options in them, but the stocks I just do not feel comfortable at night anymore because of situations that can happen that we have absolutely no control over whatsoever.
It's an interesting world in which we live in, Tim, when we can say that coming off of the bottom for COVID is a stronger impact, a stronger lift to the market than the downward pressure that could be put from a China slowdown that is deeper than we all thought would be.
Yes, but again, I think we've priced in some of the pain from I think the market's perspective in the last 3 to 6 months has been coming from a China slowdown and China not only clamping down and then some of these call them policy risks. So I do think ultimately in the same way that China was an eye into the recovery. Remember when we were looking to China also with COVID as being the place where we started to see reopening and began to measure that. I think we've seen that throughout the last year and a half that COVID has been the headwind to follow. China, to the extent that it would have been unthinkable to think of flat GDP growth in China even for a quarter is something that markets could get through. I think we're through that. And I think, if anything, again, go back to what trades make sense here now because of what we've seen out of China and even Evergrande. Look, the transmission mechanism has been commodities. And that is something that I think is giving you a major opportunity once this dust settles. And even though Evergrande, as was pointed out, will take a long time to sort, I think a lot of the pain in the commodity sector over the last 3 weeks is well overdone.